Hi, everyone. This is Rob Roy of Wave Options, and welcome to this trade review of our recently closed trade ID number 1002. As you can see, it was on Synopsis, symbol SNPS. This was a long call in our AI based impulse strategy. That's our directional based strategy that's infused with AI data points. The entry alert was sent out on February 5th. This one's going to kind of contain something that I get asked about oftentimes. When we look at the chart, you can see that we were in a wave 5 to the upside. We also had a zigzag within the wave 5. So two different Elliott wave patterns, a complex wave 5, if you will. And the C wave extension and the wave 5 were right around the same target price of 600. Looking down at the DMI, that's my favorite supporting indicator. If you've watched any of these trade reviews, you're aware of that by now. The positive directional indicator moving up, the negative down, the ADX curling up above 20. So that's a supportive nature for the DMI, showing that there's strength in the move that's currently underway is likely to continue. So when we take a look at the exit of this position, which was sent 3 days later, you can see that the exit alert, and by the way, at ewotrader.com, every one of our alerts has pages like this that contains all this information, every single one that goes out, including some reasoning and the charts that I'm sharing with you now. So on this exit, you're going to see that, well, we only went up to where the previous three was. I thought the target was to go up to the extension of that C wave around 600. Why would you exit early? Again, a common question. And every situation changes. The market is dynamic, it's ever changing. And in this case, we gapped up. So, something to take into account is we're going to fill that gap at some point, likely. We are at some resistance there of the previous wave 3 high. And with the gap and being a little bit extended from the 10-day moving average, probably going to back off a little bit. With this gap up, you get that infusion of implied volatility into the calls. And even if the stock goes higher, if it backs off and calms down a bit, that implied volatility will leave, and the stock could actually go higher and the call options be worth less. So I like to take positions off when you get these gap up big moves, and take that infusion of implied volatility. Is just like a bonus premium that's put in. And as you can see, the results here, a 72% gain in 3 days. And looking at our mark-to-market chart here, even then, we went below the zero line for a little bit before rallying up on that gap up. But another factor that we take into account is if we can get 72% in 3 days, we're going to take that every time, even if it hasn't reached its target price. So I hope you found that informative. I look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.